Okay, we're going to go ahead and get started today. My name's Shannon Dill. I'm with University of Maryland Extension, and this is one of our Wednesday webinars. It's December 14th, and we're going to be talking about creating a farm loan package. We do record these. It's being recorded now, and it's going to be posted on the Extension website, Women in Ag. We would like to thank our sponsors of the Women in Ag program, as well as our partners and collaborators. This is our last webinar of 2016, so for those of you that have been tuning in, thank you so much. We'll have a whole new set of webinars starting in 2017, so we appreciate your attendance and support in that. And we also wanted to announce the 16th Annual Regional Women in Ag Conference. It'll be February 9th in Dover Downs. We also have a pre-conference that'll be optional on February 8th. And we also have Annie's project that will be starting after the first of the year. So lots going on. For now, let's go ahead and get started. Talking today about creating a farm loan package. Again, I'm Shannon Dill with University of Maryland Extension. And what I'll be covering today is going over why get a farm business loan, some of the budgeting issues around that, what loan requirements are there, and then questions to ask from your lender. So why do people get a farm business loan or look into that? There's a number of reasons. Potentially it could be for startup costs. This is a new business. This is for expenses. They call it bricks and mortar, but that's for structural, buying land, buying buildings. Maybe it's renting commercial space, any licensing expenses, and then, of course, equipment needed for the business. Sometimes maybe it's just an equipment expense, so you're looking at mechanizing some of your operations, or maybe it's more related to transportation and marketing of your products. The third is potential expansion, so you have maybe a small business you've been operating out of your home, or you're looking to expand into other areas. So that, again, brings in sort of that building and structural piece of it, or any acquirements that you may have. Maybe you're purchasing another business to expand, or overtaking another business. The fourth is inventory. That would be purchasing things that you would need to either produce a product or resell as a product, or stocking shelves, or that type of inventory. So getting a purchase of outside goods can be very expensive, so maybe you need a business loan or some type of startup expense or startup cash for that. And then lastly, potentially it's a business opportunity going into partnership with someone. Maybe you're buying part of a business or buying all of the business, and that you want to purchase that. There's a number of financing options out there, and I think they're growing all the time. They're getting more and more, I wouldn't say complicated, but there are a lot of different options that are available now than what there ever was. The majority of people, when they do start up or they're looking at expansion, they look at their personal funds, so what they have in their savings, what they have in cash, maybe working with friends and family. If you are working with friends and family, making sure you have that in writing and that you have your terms agreed upon. They look at potentially private banks, so that could be working with loans or lines of credit. That's probably what comes to mind first, is looking at your private bank that you maybe have your checking account with, and there could be some possibilities there. Many people, if it's short term, they will look at using a credit card. Again, watch interest rates, watch annual fees, watch it if you're trying to transfer balances. There's generally some type of fees related to that. So just being careful with working with your credit cards. Some of the new opportunities out there, crowdsourcing has gotten very popular, sort of those Shark Tank kind of opportunities. Number of GoFundMes out there, maybe angel investors, venture capitalists that are out there. There's websites that help you get that set up. Just make sure you read the terms, because often they will take a percentage of the funding that you do raise. But that could be a potentially helpful way. Number of USDA programs, especially looking at farm businesses and farm products, and small business administration programs. These probably will take longer to get documents together and to have things finalized. So if you need cash fast, these may not be the programs for you, but they are low interest loans. Often they do understand more about farm production, especially the USDA loan programs, and they do have some low interest programs, and their terms are very flexible for new, beginning, and expanding growers. The last are grants, and I get a lot of calls in my office for grant programs. If there's money to purchase farms, start farms, operate farms, there's very few dollars for startups, and they don't often include the purchase of a building or a product. Generally, a grant is for something very specific that's sort of a greater good. So it's if you were doing a research project, or you were doing something on your farm that could be adapted. So are you creating jobs, or would other growers be able to do the same thing you're doing and be profitable and productive? So there are some grants out there. There's some energy grants. There's some value-added grants. But they are few and far between, so you just have to go through those and see what works best for you. SARE is another one, SARE. They have some farmer grants that are very popular. Here are a couple of steps. I'll review these in more detail, but I did want to kind of put that all on one slide. The first step is checking your credit report and your personal finances. So a bank lender is going to make sure that you have good credit, that you have a good history of repayment of your debts, and that your personal finances are in order. So the first thing I would do, you are allowed through the federal government that you are able to get one free credit report each year. That's at annualcreditreport.com, and that would be an important step in seeing where your credit is, if you want to clear anything out, if you need to close old accounts, if you want to see what's showing up on your credit report. There's a lot of, I've heard a number of people say their credit reports are not correct. So just making sure that everything that's on your credit report is you and that is correct. Step 2 is how much you want to borrow. What are the needs of the business? What are the wants of the business? What are your short-term needs? What are your long-term needs? Getting a number in your head about how much money you do need to borrow, how much can you potentially match on your own, and getting that number together. The third is to, and I know guys, review or update your business plan. Not always the most popular part of this, but getting a good plan in place is so important, and lenders will be looking at if you have a solid plan in place, and if they see a lot of holes, it doesn't make sense on the market, it doesn't work, the finances don't work, then there's going to be a lot of questions about whether you are someone that they want to lend to. So review or update your business plan. Step 4 is getting your financials in order, creating your enterprise budgets, knowing what the costs of your products are, a balance sheet, and then your cash flow statement. There's actually 2 cash flows that we'll talk about, a actual cash flow and then a projected cash flow. And then the 5th will be starting to talk to banks, exploring your lending options, and pulling all the documents needed together so that you can put together that loan package. So I talked about personal finance, and I know that this presentation is about business loans, but especially for sole proprietors, it goes back to what your personal finance options are and what your credit history is. Extension.org has a great website on personal finance, a lot of calculators on there, number of spreadsheets, lots of information about credit reports, credit scores, what they mean. So it's really very, very helpful. Get your credit report, look it over, clean up your credit if you need to. Any discrepancies on there, you can call it in. You can get, if it's not you, you can get it off your credit report. And then update your household budget, just knowing what your budget is and what you need as far as your household expenses go. The next is how much are you borrowing, and again, reviewing sort of those needs versus wants. It's really easy. They call it the big red barn syndrome, and we all want the really nice big red barn and the nice shiny new equipment. In farming, we call it new paint. But there may be some options with leasing, with cooperative buying, with maybe purchasing used equipment that makes more sense for your business. So just being careful with the big red barn syndrome where you can cut expenses. And I would recommend creating a purchasing schedule and plan. This is an example of one. We did it a number of years ago, but I think it still shows a pretty good example of what equipment we wanted, and then when we were looking at actually purchasing that, when it would work. And you can see what the total cash is, and then each year where maybe our expenses would be. So kind of getting a capital expenses, a purchasing schedule together to know what your costs are and then when you would be able to purchase it. So you can see how expansion would go. The business plan, this is putting a business plan together is an important piece of your business. Many lenders, investors, and grants are going to want to see a good business plan. This is our business planning workbook, and this website kind of goes through many of the steps of that. Looks through the goals, the marketing, financials, your human resources of that business plan. You may need to include your lease agreements, your marketing contracts, or other proof of sales. So if you're already operating, there may be some proof that they want to support that. So putting together a good business plan, we have some webinars on that. There's a ton of fact sheets out there. There's some great templates. But what it comes down to is really sitting down and putting the plan that's best for you. It doesn't need to be long. It doesn't need to be on glossy print, but it needs to be realistic to your farm and something that people can easily understand what your business, very clear in what your business is going to be doing. Moving into the financials, this is an example of an enterprise budget. I think these are just super helpful for any product that you're growing. If you're offering a service, if you have livestock, you have it by unit. You list out what your income, so that's your receipts. How much will you be producing? What is your income per unit? How much are your expenses? So looking at variable costs and your fixed costs, and then figuring out your profitability based on each of your enterprises. This differs by farms, depending on what you produce, what you grow, but is very, very helpful when putting together a business plan. These numbers that you see here will then be transferred into your cash flow statement. So you can see one of the expenses, an example is seed. So seed is going to be an expense when you get into your cash flow. So by having your enterprise budgets together, you can start to see what your cash flow, what your expenses are for seed each year. Maybe what it is for fertilizer, what it is for your other inputs, what it is for labor, machinery, that type of thing. So by having these enterprise budgets together, that's how you then developed your cash flow statement. This is just a little bit of an example about enterprise budgets and how they can work for your business. This is in the Farm Business Planning Workbook. And you can, this is an example that we work through in the eggplant example, what the variable costs are, what the net income is, and then how to do that formula. So again, very helpful for multiple reasons in the business plan, but for purposes of this presentation, it's super helpful when putting in your cash flow statement, when creating your cash flow statement. So in the business planning workbook, we talk about 3 different financial statements. It's the balance sheet, it's the income statement, and it's the cash flow statement. Today I'm going to talk about 2 pieces. That's the balance sheet and the cash flow. In your financial plan, the balance sheet will give you solvency, what is your net worth. Income statement will show your profitability. Cash flow will show your liquidity, so whether you can pay for your expenses, if you have enough income for your expenses. And the pro forma statements are those estimated or projected statements. And again, lenders are going to want to see that farm operations and other factors. They may require projections, so you can show over time how you're going to increase profits and how you're going to be able to repay debts. So more specifically on a balance sheet, and every year I go to get my line of credit updated, or I've looked into a private loan, they ask for an updated balance sheet. A balance sheet is a snapshot of the business's or your personal financial position, so it's generally dated. So as of today, this is what I owe, this is what my assets, this is what my liabilities are. Next month, it might be different, right? Because potentially I purchased assets, and now I have some liabilities, or maybe I've paid off. You know, I've made my car payment, so my liabilities are less. So that's what a balance sheet is. It's always dated. It summarizes your assets, your liabilities, and then it does the calculation, assets minus liabilities, to get your net worth. It's generally divided into 3 to 4 parts. So it's your current, what's due in less than 12 months. What are your intermediate? So 1 to 10 years. That's often equipment. And then your long-term is greater than 10 years, which would be your mortgages, your land expenses. And then often you'll include your non-farm assets and liabilities. So here's just an example of some of the things that would be listed. So for your assets, it's your cash, accounts receivable, your inventory, automobiles, machinery, equipment, and your properties. Your liabilities would be your accounts payable, so what you owe, any credit card debt, any notes payable, your mortgages, and then your loans. Then again, you do the simple calculation of assets minus liabilities, and you get your net worth. A positive net worth, a strong net worth, they'll be able to loan you more money because you have that higher net worth. Here's just an example of the spreadsheet, and again on the website I mentioned, and it'll be at the end of the PowerPoint. A lot of worksheets are available, and you can download those and use those for your own businesses. So moving from the balance sheet into the cash flow statement, the cash flow summarizes all cash inflows and outflows for a period of time. So it's really your checkbook. It's what your checkbook looks like. Money comes in, money goes out, right? So your inflows are your product sales, your receipts, any sales of capital equipment, any borrowed money. Your outflows would be production expenses, capital expenditures, your loan payments, and your living expenses. It's really important with farming because of the seasonality of it. So often you're putting your money out in the beginning to seed, to plant, livestock. Then you don't get that return for, maybe it's 5 months, maybe it's 12 months in some crops. Fruit crops, perennial crops, it might be 2 to 3 years. So it's very helpful, and it's going to help you plan your income and expenses over that year and then repay that debt service that you may have. Cash flow does not take into account inventory or depreciation. So again, it's just strictly that inflow and outflow. If you purchase inventory, it doesn't show that that is part of your net worth. And often people will do a projected and an actual cash flow. So in December, this time of year, you can run a report and do what was my actual cash flow this year? What did my checkbook look like? And then for 2016, and then based on then, I can look at 2017. What am I looking at? Am I looking for more expenses, more income, more, you know, am I going to go up 5% in sales? Or my expenses going up 2%? So you can hopefully make some projections based on what your actual cash flow is. So being able to compare those two documents is very helpful. And over time, you're better able to estimate what your cash flow is going to be. This is just an example of what a spreadsheet could look like. Of course, you know, all the different categories you would change depending on your business and your farm. But this is just an example of what they would be. Again, they're posted. You have access to this spreadsheet. You can see the formulas are in it. The first column has last year's. And then often some people do cash flow by month. Some do it by quarter. Some do it by year, depending on how you want to measure it. So any of those could be helpful, again, depending on how specific you want to be. So moving from talking about the financial statements into communicating with the lender. So a lot of homework when putting together a farm loan package, getting documents together, getting information together. Moving into question to ask a lender. So let's say you know what you want to purchase, you've got your finances together, you've looked at your business plan. Questions to start talking with the lender about is what is the likelihood of your approval? What are the loan specifics? So what are the terms? What is the interest? What will the total cost be? Is there prepayment penalties? Is there an application fee or points associated with your activity? Will they be looking at your personal credit? Who should be on the loan application, which is a big question. Is it a spouse? Is it a business partner? How do you create that and put that together? And then shop around to find terms in a bank that fits your needs. So there's a lot of different lending institutions out there. There's farm-related lending institutions. There's private local banks, and then there is you know, national banks that buy and sell mortgages. So you really have to find something that you're comfortable with. Ask lots of questions, compare prices, compare them against each other, and just, you know, in my experience, I've been very frank about what I've been offered in other, you know, what bank may offer me what, and see if they're willing to work with you and if you're comfortable with that relationship. So there is the numbers part of it, and then there's that other, you know, interpersonal piece of it. Gathering documents, that's going to take a little while. Often you have a loan application form that you'll need to complete. They'll want some personal information based on that. You'll need to include bank statements. Often, again, a business plan, putting that together. Profit and loss statements of the business. So if you have a business already operating, they're going to want to see those financial documents. Often tax returns, 1 to 2 years of tax returns are going to be needed. All of your loan obligations and loan statements, they'll want to know what is outstanding and what those loan details are. Legal documents, so if you have any lease agreements, any contracts, you know, marketing contracts, they'll want to have those, as well as your articles of incorporation if you have an LLC or a partnership. They may want to see that. Property tax bills, any commercial bills or buildings, they'll want to see that information. And then also personal information based on what you owe through, you know, child support, divorce decrees, you know, separation papers, and veteran certificates. So there'll be a lot of documents needed to put together that loan package. Wrapping up, here are a few resources that helps kind of pull that together. There is a lot of homework involved when pulling together a loan package. These two are very helpful. We have a Financial Matters and then the Farm Business Planning Workbook, as well as the extension.org website looking at personal finance. By putting all these together, you can get a loan package that has all the information needed that's best for your business, and hopefully you'll find a lender or a financial institution that works for you. Any questions, feel free to contact me. My email is sdill@umd.edu. That's sdill@umd.edu. And my office phone number is 410-822-1244. Thank you very much.
Thank you for watching our archived presentation of our Wednesday webinar. If you would like to see more archived Wednesday webinars, please visit our YouTube channel, or to find a schedule of upcoming live webinars, visit our website.